The last one I want to go on to, I suppose, speaks most directly to this being the Asia Finance Forum, is disaster risk finance mechanisms. So we're focusing on two areas of innovation, so parametric insurance and forecast-based insurance. Both of these rely on risk indices rather than actual events to determine whether areas at risk are eligible for payouts. So parametric insurance can be triggered by an index reading this, rather than verified losses. This allows for payments to be made much more rapidly than under traditional indemnity models. Forecast-based financing it works in a similar way, except it provides preemptive funding that can be used to target preventative measures. Both of these, by providing timely funding, reduce the losses experienced by vulnerable people, and also potentially by governments who face fiscal pressures as a result of disasters. So I think both of these are not new, but they are becoming much more mainstream, and a lot of that, the reason for that are these multipliers, which should be becoming more and more familiar. So we have Earth observation, Internet of Things, and artificial intelligence innovations can help us to design these risk indices that determine when a payout is made. And we can align these indices, when they're made more sophisticated, much more closely with actual losses as a result, by using richer data sets and more sophisticated data processing techniques. This reduces what's known as basis risk, which is when you either fail to receive a payout when there is a disaster because the index doesn't pick up that disaster, or conversely you receive a payout even though there has been no loss because the index triggers but there is no disaster. So that reducing basis risk greatly improves the value of the products and reduces costs. Another innovation we haven't spoken about so far, which is potentially of importance in the future, is blockchain, which can be used to execute contracts more automatically. This might expedite payments even more by observing triggers in public data sets and making payments rather than requiring some process of sign-off. It also, through automation, can reduce counterparty risk. On the community side, as well as social media, which can be used to target insurance products to users. We also have advances in mobile banking, which when we're thinking about individuals who may be unbanked, wanting to have access to disaster risk finance mechanisms, we can organise payments, but mobile payments to support the rollout of things. A couple of applications I'll talk about very quickly. So firstly, Acre, which I think is a good example of a community-based innovation. So this bundles insurance for smallholder farmers with high-quality seed, thereby increasing the uptake of both of these things and creating co-benefits in agricultural production, and using mobile payment systems to support rapid payment directly to farmers. Another example is livestock insurance in Kenya, which has been developed by Swiss Re and is targeted towards pastoralists in areas that have previously been pastoralists in remote areas with little mobile coverage. In these, the advance here was in developing a parametric trigger that was appropriate for smallholders who face a rather complex relationship between on-the-ground conditions and losses as a result of their mobility. So, moving on to the question, so that's, I think, just a sort of tour of some of the things that we looked at in our report. We then move on to the question of what policymakers can and should do in order to promote the uptake and get the most out of new technologies and innovations. we look at a number of specific barriers, and looking at the clock ticking down, I'm not going to have time to go into all of them in lots of detail. But I think the important thing to note is, just as we spoke about the individual innovations having kind of multiplicative effect, augmenting each other along the value chain, the barriers, which can apply to individual technologies, can have the opposite effect. So they can form bottlenecks in the value chain to prevent not only the uptake of a specific technology that the barrier is relevant to, but also other technologies in this DRF ecosystem that either support it or rely on it. So it's very important to take a holistic approach to addressing these barriers. Very briefly though, I think there are some relatively straightforward ones. So in some of these, particularly data transmission technologies, require infrastructure, so particularly network connectivity, mobile networks, access to smartphones. Within policy-making bodies, there is a need for implementation capacity. So many of these decision support tools have been developed using sophisticated data collection technologies and data processing technologies, require users to interpret them and make decisions on those basis. This requires knowledge transfer and technical training. There's also, there can be, as well as barriers related to human capital access and barriers related to access to physical equipment, where I think here there's a question, part of the solution is making the most of economies of scale and scalability. Then another area of barrier is around, can be at the user side, so particularly disaster risk finance is rather unfamiliar to many smallholders who may be targets for this. Part of the solution here is around raising that awareness, providing digital literacy training, piloting schemes, understanding how they can be made to work for the user to be reliable. And then we have around policy, governance and regulatory areas. So innovation is inherently risky. It has inherent benefits. These can be captured within the country. So we saw in El Salvador that El Salvadorian innovation is required to benefit that country. But doing so is risky, and it requires incentives to invest, and it requires policymakers to be motivated for responsibility. We also find with technology, very briefly, a host of regulatory challenges related to particularly privacy, finance, consumer protection, where we have rapidly moving technologies, but the need for regulation to keep track of those technologies and to continue to provide users with the protection that they require in order to have confidence in the technologies, and also, for example, not preclude certain technologies from having a benefit. So in some cases, we still see parametric insurance policies don't have a supporting legal framework. So these are the kind of key barriers. Just my last slide. I think the thing I really want to emphasise is this, the importance of adopting a holistic approach. Given the interconnectedness of these innovations, we want to, I think there are interventions that should be made both nationally and internationally that think about this in a holistic way. So we want to make innovation a distinct DRM policy goal with appropriate oversight. This is because innovation has distinct benefits, and because innovation, given these complex interdependencies, requires coordination and management. So one suggestion we made in the report was the creation of a chief technology officer or chief innovation officer in disaster agencies. There are a host of specific interventions around those individual enabling conditions that I spoke about a moment ago. I won't go into. But then I think it's also important to note that there are, this whole process can be supported very effectively by international organisations such as the ADB, such as APEC, who have tremendous capacity in this area, and I think can also host schemes where there are significant economies of scale, and make sure we get the most out of those. Okay, I think I'm out of time, so I'll let Lee come and take the floor and respond. I'm sorry.
Thank you very much, Oliver. Very intriguing presentation. Actually, this year's Nobel Prize was given to three professors, Professor Abhijit Banerjee and Professor Esther Duflo from MIT and Michael Kremer from Harvard, to the contribution of applying a randomized control trial in development policy intervention, evaluation. And microinsurance, rainfall risk transfer products in India or other developing countries is one of the main focus of this application of RCT. And many existing results tells theoretically index insurance is fascinating. There's no moral hazard, no adverse selection by nature. However, penetration rate or take-up rate is really low. So people started wondering why. And naturally, basis risk is elements people started talking about. But by nature, rainfall index insurance basis risk is an unavoidable part of the missing piece. And but I think Oliver said application of Earth observation, Internet of Things, and also AI combined with the blockchain, maybe we can minimize even basis risk. I thought this was really fascinating. So today we have a discussant, Mr. Ray Wolfram, and may we now invite Ray Wolfram to share his thoughts. Mr. Wolfram is a policy analyst in the OECD's Directorate for Financial and Enterprise Affairs, undertaking research and policy analysis on financial management and disaster risks. Mr. Wolfram has led development of OECD guidance on disaster risk financing in response to natural and man-made catastrophes. Prior to joining OECD, Mr. Wolfram worked in the financial sector policy branch of Canadian Department of Finance and at Global Affairs Canada on international financing issues. Mr. Wolfram has an MA in International Affairs from Carleton University, Canada, and BA from University of British Columbia. So with that, Mr. Wolfram, you have 10 minutes to share your views.
Thank you very much, Mr. Sawada. So good morning to everybody, and thank you very much for joining us in what we hope has been and will continue to be a very interesting and stimulating discussion on the role of technology and innovation in disaster risk management and financing. And thank you very much to Oliver and the Vivid and IASA team for all the work that they've done over the last few months on what I think is a very important topic. And of course to the ADB for including this topic in the agenda of what looks like a very busy week of financial issues. So I'm going to add a few comments to what Ollie presented around what I think are some of the most important and interesting elements and where we can take this study going forward. Before I do, I want to say a couple of words of about why the ADB and the OECD asked Ollie and the Vivid and the IASA team to help us with an examination of this topic. So my role at the OECD is really to provide analysis and guidance on how governments can manage the financial impacts of disaster risks. I work for an OECD committee called the Insurance and Private Pensions Committee. So as you can probably guess, insurance is a pretty important area of focus for us in terms of the types of financial protection tools that we examine. So what I've learned in a number of years of working on this issue is, first of all, that insurance markets play a useful role in providing a source of funding for recovery and reconstruction after natural catastrophe events. There's often a correlation between the level of insurance penetration and the speed of economic recovery after such an event. Insurance only covers a small portion of all economic losses after a natural catastrophe, and I think this is generally true both in sort of the very mature insurance markets in many OECD countries, as well as in emerging economies of Southeast Asia and elsewhere. with some exceptions. There are two main types of assets that are underinsured and that are therefore responsible for this protection gap. Government-owned assets and assets owned by households and individuals, their homes, their micro and small businesses. And individuals are often unwilling to buy insurance for catastrophe perils at the price that insurance companies are willing to sell it. The insurance companies will always say that this is because individuals are unaware of their true exposure to risk, and I'm sure there's truth in that. But there's also an element of high cost at the insurance provider, whether it be because of risk uncertainty, the level of exposure, insurance commissions, reinsurance, regulatory, or other costs. The other thing that I've learned is that despite all of the work that's being done across international organizations, government agencies, the private sector, and academia, there's actually been very little sign of improvement in recent years. The share of losses that are insured in many places is really not that much higher than it was at the turn of the century, for example. So in the last 2 to 3 years, there's been a significant change in emphasis, in the amount of emphasis being placed on technology in the insurance sector. So just as an example, at the OECD, we have a biannual exercise to collect information from our members on their priorities and what they'd like us to work on. And it's pretty hard now to find a country that hasn't raised digitalization of insurance business models as a top priority for them. So whether it be new sources of underwriting data and analytical tools, new ways to distribute insurance, or new approaches to claims assessment, or even completely new products like some of the ones that Oliver mentioned, there's clearly an evolution in how the insurance sector is developing, managing, and delivering its financial protection products. So this change raises a number of policy issues around things like bias and privacy and mutuality that I won't get into here. But it also raises it creates a number of huge opportunities to expand the reach of insurance and therefore ultimately reduce the economic and financial impact of catastrophes. It should lower the cost of underwriting, distribution, and claims adjustment, and therefore the overall cost of coverage, potentially bringing the price down to a level that more people are willing and able to pay for that coverage. It should allow for new and potentially more effective ways to communicate about risk and the value of financial protection. And it should provide a basis to design entirely new products that might be better suited to the needs of governments and small businesses and households that are generally underinsured. So I might be being too optimistic, or maybe I'm just short-sighted or naive, but in my view, these changes to the insurance business model and sort of the pervasiveness of the integration of these innovations across the world might offer the kind of sort of exogenous shock that might really make a difference in the level of the protection gap, a difference that hasn't really occurred in the last 20 years, as I mentioned. So my optimism partly results from what I think is one of the most important developments, and I'm glad that Oliver, we've talked about this a lot over the last few months, which is the fact that these different technologies are sort of the intersection of these different technologies and how they're sort of these intersections are currently emerging. So I mean, for example, the ability to collect more and better data, the improvements in Earth observation that Oliver mentioned, along with the increasing availability of sensor data through connected devices and real-time crowdsourced data from social media. All of these new avenues of data collection are emerging at the same time as there's technologies that allow our ability to analyze that data is maturing. The artificial intelligence and machine learning that allow us to sort through all of this additional data from satellite images to tweets in a way that can identify meaning. The smartphones and social media that allow us to communicate that meaning more effectively into a much larger group of people. And then innovations like blockchain, which allow us to design contracts that integrate and analyze data sources and execute contractual obligations without manual intervention. And I'm sure there's many more connections that I haven't thought of, and probably many that no one has yet thought of. So obviously the insurance sector is making these connections on its own, and that's how it's supposed to work. The companies have invested capital into their business model or into their businesses, and they should be examining how to improve those processes and products and what technologies and innovations provide real value. The role of governments, as Oliver mentioned, and I'm pleased with the focus that Oliver and the team is placing on this, is to really create an enabling environment, and to not stand in the way when there's a new technology or innovation that with benefits for those that regulations are meant to protect the consumers. So in terms of insurance, there's a number of examples of how regulatory frameworks need to be adapted, whether it be process issues around things like paper-based disclosures or electronic signatures, or more fundamental issues around things like what types of losses can be insured, legally insured. And so this is an issue in some of the new types of products like parametric insurance and forecast-based financing that Oliver mentioned. So this is an area that I expect that we will look into in more detail at the OECD in the coming years. And there's also a number of other things that governments can do beyond adapting insurance regulatory frameworks. And the Vivid and IASA team provided a number of interesting proposals ranging from investments in telecommunications, infrastructure and connectivity, to knowledge transfer and training, to providing incentives and seed funding to support demonstration projects. One thing I'd like to highlight, two things I'd like to highlight where I think public policy can play a general role in this area is really around sharing experience. So first of all, sharing experience between the public and private sector, and particularly learning from the experience of the insurance sector in integrating new technologies. So public sector disaster risk managers and insurance companies are really in the same business when you think about it. They're both in the business of reducing exposure to catastrophe risk, and their work involves assessing risk, raising awareness to risk, and looking at ways to reduce it, and then when an event happens, assessing the damages and losses. The application of artificial intelligence or connected devices in the insurance sector should come with the same benefits and the same risks for public sector managers. So each has something to learn from each other. And so, well, this might seem natural. I think it doesn't necessarily occur naturally. So if you look at the example of catastrophe modeling, which is a tool that's been used with increasing confidence in the insurance sector, but hasn't really quite reached into public sector risk management. The second area I'd like to highlight is the sharing of experience across countries, whether it be through the sharing of case studies on the application of emerging technologies and the sharing of experience in adapting policy and regulatory frameworks. Countries are already learning from each other. You can see this in the dissemination of regulatory sandbox approaches, for example, to piloting new fintech and insurance business models. And there's certainly further opportunities to learn from each other's experience. So this is why we're very happy that APEC has agreed to include this work in their agenda, and why we are pleased that so many representatives have joined us today for this discussion. So I'll end my remarks there, and I hope that I provided some useful perspectives on why we think this is an important topic and the issues we think are worth further examination. So thanks very much for your attention, and I look forward to this morning's discussions.
Okay, thank you very much, Lee, for a very nice discussion. So I think we have 10, 15 minutes for Q&A with the floor. So now, may we now open the floor, and we can invite the questions and then response from the participants. When you asking question, making comments, please kindly introduce yourself and briefly stating your name, country or organization before raising your question. And also, because of time constraint, please make your question as concise as possible. Please.
Thank you for your excellent presentations. My name is Dan Agustin, Agricultural Sector, Land Bank of the Philippines. And to Mr. Wolfman, are reinsurers like Lloyd's of London or Swiss Re ready to accept this kind of innovation, because insurance companies need reinsurers? And Dr. Oliver Walker, Thank you for an excellent, very comprehensive presentation, holistic. This will involve many sectors of government and people. Have you dovetailed a training program to make this the adoption successful? Thank you very much.
So hopefully this is on, you can hear me, yes, it sounds like it is. So thanks very much for raising the issue of reinsurance. So I can't speak for the reinsurers, I think the answer is yes. And the one reason why I do think it's yes is that we're actually working on a project around reinsurance regulation across different countries. And one of the issues that reinsurers always raise when they don't have access to a market because of some kind of an objective for premium retention in that country is that they're not able to share the innovation that they've developed in other countries with that country because they feel like they're not going to get the reinsurance business from that work. So my perspective is that, or at least what I've been told, is that the reinsurance sector is actually very interested in innovating and taking on new forms of risk transfer.
So thank you very much for a very good question. I mean, the very short answer is no, we haven't, and I'm not aware of a single training program. I mean, I think people in the room will know that even getting a sort of coordinated and integrated disaster risk management across government is a challenge. So I think this being an emerging field, it's a kind of another challenge to layer on top of that. But I don't think it's an insurmountable challenge either in terms of the sort of training and expertise that's required, because many of the individual solutions that are listed to create those enabling conditions are pretty well understood. I think it's a case of seeing this whole picture, understanding from what other countries is working and what kind of technologies are on the horizon and can help in the future. So I think it's a very good suggestion.
Thank you. My name is Vidyo from Indonesian Financial Service Authority. Yeah, short question. My question to Mr. Dr. Walker. Yeah, I'm interested in parametric insurance since Indonesia has a lot of disaster